Welcome to TradeTheMBI.com. This is John. This report is for the 30th. And, well, at the end of the week, I mentioned on Thursday that we expected a little bit of pullback in there. It was actually a little even less than I thought it would be. We didn't even get close to coming back to the ABM yellow line right here, which is at the 2279 range. And you can see cyan below the red line means we're still in a bullish configuration. Shakeout is rising after the reset, so pretty much we've had a complete reset and started a new run back up, which means that yes, we're still poised to be able to continue the up spike. And really the question is going to be how far leading will this market be to the actual results. We saw very weak numbers come out for growth, and that isn't too surprising in the sense that it's going to take 6 or more months before some of the changes, and I'm not even calling them changes as much as just the talk of change, and how quickly that will translate usually takes a lot longer than 8 months to a year before some of these stimulus ideas, and the market being, a leading indicator, probably a little bit ahead of things. It just is going to be a question of how fervent they believe the Congress will be able to act and how quickly that will take place. That's not been really hammered down at this particular point. So a lot of this up spike is probably ahead of the game, and it's going to be one of those where as some of the news comes out, we're going to see some selling back into it. We can already see that we've reached some positive extremes on these. So getting frothy, it can still extend itself because you've got a lot of shorts squeezed a little bit. We're not seeing that many of them are starting to come back into it now as we get to more highs, and the more they keep doing that, it just propels things just a little bit more. So there have been a lot of people positioned on the wrong side to miss the move, and it's causing some grief. The fact that the euro is holding up well away from the danger levels now is certainly providing more stability. The throwback of the EU not being able to exit anytime quick certainly has an impact. It's very interesting because a lot of the cabinet picks and things still haven't been finalized, and so until some of these details and policies start to be developed, you just have hyperbole at this point talk, and the market can only do so much with that at this particular point. It's positively slanted from the standpoint that at least it's pro-growth. The question will be how combative the Fed is going to be as it relates to that. Here's bonds still at the bottom end of the range here. We're still looking for a further dip, but it's going to take a while. This isn't, it's no different than when we were up in the 140 range and it took many months for it to finally start its decay. That happened pretty rapidly as there was an expectation, but with the slowing readings, if the Fed has to maintain stability of rates and not raise them as much or as aggressive as it was hinting that it would, that certainly will put a damper on the decline, and you may see an actual pop just a little bit if the Fed has to hold off. Oil, it's just not a play as far as I'm concerned at this particular point. It's just frozen. I think that you're more likely to see a downside pressure, particularly if you have this kind of weakness showing in the economy. You're certainly not seeing a demand increase that's going to take care of that excess supply, and that excess supply is like a spigot. It can be turned on very quickly. You now have the potential of additional pipelines, and the amount of barrels that can be added at a moment's notice is certainly going to have some very interesting geopolitical effects, but certainly inflation is going to be dampened by that without growth. So unless you saw the economy really starting to heat up, as some suggested that it was, it seemed kind of suspect when they were talking about it. But the optimism going forward is there, but there's a lag between optimism and reality. And gold, having reset itself all the way back down to the ABM green level, just right at it, and then popping a little bit. We would expect that dips in gold are going to be an opportunity to move back into, because there is no question that that's generally the tilt. So it was the end of Thursday we started to get some short signals. We pretty much stayed flat throughout that, but we kept showing additional short readings coming through here, and None of that's changed. Pretty much we're in a flat mode with a tiny little brief pop-up, but it wasn't anything significant. That spread in the DOC between the cyan and red has shown the orange staying pretty much inside of it. That is a continuation. Didn't pop out until right over here where we had made a break below green ABMs, and that's what sparked a little bit of a rally at the end to curtail losses, so to speak. I'll be putting together indicators and sending out those for the new month. Have those ready to go because it'll be middle of the week for the new month, and you don't want to get caught in between. But the changes on the shakeout, you won't see anything different other than instead of it being colored, you're just going to see green, red, and probably the white will be more in the neutral areas. So that's all good. And just keep plugging away with that. Completed some of the final memorials for Amy and that, which certainly is going to allow me more time to focus on these details so that we get some of them hammered out much quicker, which I think is an exciting thing. It's been a difficult period, and I appreciate everyone's patience through this tough time for us and our family, and your support has been very welcome, and we thank you for it. As always, though, trade well and look for us on the Skype chat.